Hey, I want to bring in Scott Bauer and get his thoughts on this one. Joining us this morning, CEO of Prosper Trading Academy. Scott, you got to take your jaw up off the floor here if you're going to provide any commentary. I mean, literally, I feel like mine was dragging on the floor. It definitely hit it as we brought you in here. Talk to me about non-farm payrolls. I know you've only had a minute to look at the number here, but not only the payrolls number, but I'm also looking at average hourly earnings at 0.4. That's above expectations and twice what it was last month at 0.2.
Wow is right. And the market never ceases to surprise because anybody 10 minutes ago would have said a number of 272. We would have seen S&P's probably down 50 points.
I said a number. I said down 200 will do it.
Yeah, absolutely. And look where we are right now. It barely, it moved just a little bit right after the number. It went down a little bit further, and look where we are right now.
Yeah.
We're not really down that far. Now, the thing that has moved are rates. The 10-year is up pretty big. But the equity market, I am so surprised by this, Ben. I can't believe it. And that tells me there's got to be something deeper in the numbers here that we're not seeing yet. I know there was a revision to last month.
Down to 165.
10,000 as well.
Yeah.
There's got to be something in this number that the algos, someone is seeing that we're not yet, because otherwise we would have been down way more than we are right now.
Scott, the only thing I can see is that unemployment ticked up to 4% from 3.9. I mean, expectations were for it to come in again in line with last month's reading, but a little bit higher there. I'd be surprised if that's it. Participation at 62.5. They were prior was 62.7. But I like your line of thinking there. But I do want to point to the S&Ps, which are struggling to recover. I mean, we're not far from that low right now. In fact, we're starting to turn a bit south here. We're only about 7 points off that low. Is this going to be a day to watch as the dust settles from this one? I feel like it's going to take a little while for traders to sift through this data.
I agree with that, because this is very confusing.
Yeah.
Really, really confusing that we are not down way more than we are right now. Look at the dollar. The dollar's rebounded from basically right around 104. It's up, about 0.5% right now. That's a pretty strong move.
Yeah.
Okay, that's a pretty strong move. It's the move in fixed income, in bonds that is really leading to me where we have to look. And look at that 10-year move.
441. We're making highs as we speak in the 10-year.
Yep. Yeah, that's a pretty big move. So I think that we're not finished with this report yet, Ben. There's got to be something there that we just haven't seen yet. And maybe it's that break of 3.9 to 4% on unemployment. But you know what? 4%, it's really just a round number. I mean, if you think about it. So I'm very perplexed. I'm very interested to see what volatility is going to do. Coming into today, S&P volatility for just today was obviously a lot higher than where it is going out to Monday. That came with the uncertainty of this report. I know that's going to come down here, but boy, this really adds some big question marks to the Fed. This really boxes them further back into the corner. Not a number they wanted to see. They probably didn't want to see on the flip side either. They probably didn't want to see 100,000.
Yeah.
Exactly.
That's a good point.
So following what Canada and the ECB did this week here, and a lot of, let's call it, optimism out there that, okay, the stage is set for the Fed, I think this backs that up for sure.
Scott,
backing it up, meaning pushing it back further, not backs up why we should potentially cut rates.
Understood. Pushes back rate cut expectations,
Timeline.
You're saying.
Exactly.
Right.
Exactly.
In many ways, I would agree with your point there in terms of this number 100 versus 272, the lesser of two evils, right? When you think about it, because this is a market. Well, we talked about some of the themes this week where we've seen late day rallies for one. Started off a week ago on Friday with that big move up we saw. Again last week, but then you also have some of the themes that we've seen, tech, right, really leading this, AI being the major focus, but also investors focusing on the positive, discounting the negative. And maybe what you're looking for here is just the idea that investors are like, look, if the Fed's not going to be cutting rates, at least we have a strong economy that's still kind of doing pretty well in this higher for longer environment.
Listen, we don't know at any one time when good news is bad news is good news. And the weak eco data that we've seen over the last week or two that the Fed and the market kind of was wishing for Well, maybe not so much. You know, people were starting to say, this isn't so good. Maybe this is leading to recession. So I guess the other side of that is, okay, this is a really strong report. Maybe that's now something that people are looking at and saying, okay, you know, it's not getting worse. The economy is still pretty good. And remember, the market has been extremely accepting of these higher rates. You know,
Absolutely.
even where we were just, you know, a few weeks ago when we saw the 10-year above 460, you know, the markets were just a smidge off of their all-time highs.
Yeah, and you know, one could argue as investors are kind of a little bit concerned about the weaker data, they just flood into these mega cap tech stocks like NVIDIA.
Yeah.
Even Apple this week was the beneficiary, one could argue, of some of those concerns associated with a bit of a weaker economy. And then even bonds, right? They get rallied up, yields come off. And so that sort of helps stocks kind of hold their own in many ways, or off those extremes, as we pointed to earlier, that April low, right? Taking out the March lows, but no follow through there. Scott, lastly, real quick, I hate to get tunnel vision when we have a big data point like this, and especially when it beats expectations along these lines. But talk to us. Have you had a chance to look ahead to next week?
Yes, you know, with earnings pretty much behind us now, the focus really is going to be on whatever eco data is coming out.
Okay.
The big guys are behind us now, and where do we go from here? There's a little bit of a lull. It's a little bit of summer trade, which, you know, a lot of traders look forward to, but that could mean lower volumes, and that could mean that we see some bigger moves because of lower volumes. So I would expect volatility to actually hang in here quite a bit, even though it's the summer. People are going to be expecting vol to come down. I would not be selling volatility here, Ben. I really wouldn't.
Build up with the Fed, everything else that's going on. We've got geopolitical tensions which continue to play out, which we've become very callous to, right? I feel like in the Middle East and in Ukraine as well. So, I mean, lots going on, to say the least. Scott, really appreciate you joining us and sharing part of your busy morning with us here and your thoughts. Scott Bauer, CEO of Prosper Trading Academy. Thanks to you, Scott.